Indian stock market just hit another milestone with Nifty soaring past the 25,000 mark for the first time ever. The latest 1,000 point leap happened in just 24 trading sessions, making it the third fastest 1,000 point rally on Dalal Street. Since the recent low on June 4th, the day of the Lok Sabha election outcome, the Nifty has now surged over 14%. So far in 2024, it's up more than 15%, outperforming most global indices. What's fueling this bull run now? First up, the US Federal Reserve's dovish stance. The Fed has kept interest rates unchanged for the 8th consecutive time in its July policy meet. But here's the kicker. Fed Chair Jerome Powell hinted that rate cuts could start soon as September. He noted that the risk of unemployment is now on par with the risk of rising prices. And even on inflation, it is easing and there has been notable progress towards the central bank's 2% target. As a result, the dollar index fell to a 2-week low of around 104 and the US 10-year bond yields dropped by about 10 basis points. Now, this dip in the dollar and bond yields bodes well for the Indian markets. It makes emerging markets like India more attractive to investors as they seek better returns compared to the lower yields in the US. Foreign institutional investors who had turned net sellers after the hike in capital gains tax in the union budget are likely to return as well. This potential inflow is crucial, but it's not the only driving force. Retail investors are making a big splash. The influx of new retail investors into the Indian stock market has been astounding. Their optimism is a major reason behind the market surge. Every week, 8 to 10 lakh new investors are entering the stock markets. The number of investors registered with the BSE has crossed 18.3 crore, with 4.6 crore people joining in the last year alone. Strong domestic institutional investor flows are also playing a key role. They have not only helped reduce market volatility, but have been significant catalysts for driving markets to new highs, showcasing the strength of domestic liquidity. Corporate earnings in the first quarter of this financial year are another positive factor. Better than expected results from IT majors and a cyclical upturn in auto companies are boosting investor confidence. Additionally, with expectations of a good monsoon this year and a strong focus on the agri sector in the budget, there are green shoots of recovery in the rural market, driving up consumption stocks. But the big question is, can this party on Dalal Street continue? Now, valuations are high across segments and the recent rally has led to an overheated market. However, the strong retail participation backed by India's robust economic growth could sustain the bull run in the medium to long term. While the risk of an unexpected black swan event and volatility from the US presidential elections could trigger corrections, experts believe the Indian stock markets remain structurally positive. They anticipate intermittent corrections but expect the Nifty 50 to continue its upward trajectory.